This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. Warren Buffett recently announced his retirement after 55 years as CEO of Berkshire Hathaway. So in this video, we'll discuss today's market environment through the lens of Warren Buffett's wisdom along the way. One of the most famous Buffett quotes is to be fearful when others are greedy and greedy when others are fearful. This continues to resonate in today's market environment, especially after recent periods of market volatility. This quote is a reminder to focus on the key principles of investing around patience, discipline, and maintaining a long-term perspective. While steady markets feel comfortable, opportunities often emerge during periods of uncertainty. As policy shifts continue to influence market movements, Buffett's time-tested wisdom serves as a valuable compass for navigating today's complex financial landscape. First, let's talk about earnings. This chart shows the S&P price-to-earnings ratio using forward earnings estimates over the next 12 months. It shows that the PE ratio has started to trend back down closer to historical averages. With recent market volatility and pullbacks, valuations have come down from their previous highs in what is often called a valuation reset. After reaching nearly historic highs earlier this year, the S&P 500's price-to-earnings ratio has now settled in line with its decade average. As Buffett wrote in one of his annual letters, "Whether I'm talking about stocks or socks, I like buying quality merchandise when it's marked down." While short-term concerns around tariffs and economic uncertainty have contributed to the recent pullback, long-term investors may find opportunity in these more reasonable valuations. Next, Warren Buffett wrote that it's important to focus on the future productivity of the asset you are considering. This wisdom is relevant as we examine today's corporate landscape and the trajectory of earnings growth. Corporate America continues to demonstrate remarkable resilience, with more than 3/4 of the S&P 500 companies having reported first quarter results. Earnings have grown an impressive 12.8%, significantly exceeding the 7.2% initially projected. This chart shows the S&P 500 index alongside its trailing 12-month earnings per share. It highlights that over the long run, the stock market tends to follow earnings, which in turn tend to track economic growth. To simplify it further, when you buy a stock, you are getting ownership in that company. Like an owner of any company, be it one in the S&P 500 index or a small private company, say a local restaurant. Your goal as the owner of that company is to make money. And the more earnings you have, the more your value will increase. There is a lot of complexity with investing, but understanding and simplifying it can help to stay invested for the long run. Finally, this chart shows dividend yields by sector. Despite ongoing market uncertainty, dividends have continued their upward trajectory, enhancing total returns for investors. When companies reduce their dividends, it often signals management's concern around deteriorating financial conditions. As Buffett has said, it's not good news when any company cuts its dividend dramatically. Fortunately, that's not what we're seeing in today's market. This positive trend in dividend growth could reflect the underlying financial health of corporations across America. Despite market volatility driven by tariff uncertainty, corporate America continues to demonstrate underlying strength through solid earnings, growing dividends, and strategic investments in future capabilities. That being said, prudent investors should always be prepared for a range of outcomes, as the future is always uncertain. I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our eye-opening white paper titled Busting 7 Risk and Return Myths. You can click on the link below or visit our website at dynamicwg.com. or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.